Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's conversation. I'm really excited today to talk about Airwallex, and we have with us Ravi Adusumilli, who is the president and general manager of the Americas for Airwallex, and he's also had an amazing career in various business development roles across the technology space. And so with that, I'm really excited to learn from him. Ravi, welcome to the conversation.
Thank you, Lex, for having me. Excited to have this conversation with you.
Let's start with sort of the broad strokes of your career. You've been in Silicon Valley and some of the most iconic companies, from Pinterest to Facebook to Netflix. What role do you like taking in those companies? Like, what did you gravitate to, and what do you think is the unifying thread?
I've been excited about building businesses through partnerships for a long time. It was, a by chance product that I was working on way back in my career at Hewlett-Packard, actually, that led me on a path. I was a product manager then. I had to build a product that required partnerships from companies like Google, Disney, DreamWorks, and so on. And this is now more than a decade ago, where two different companies coming together to deliver something amazing to the customers that either company could not necessarily do it by themselves, Lex. So I kind of jumped on that opportunity. And since then, until I joined Airwallex, that has been my area of passion, whether it was at Netflix building a partner ecosystem where you can deliver this amazing streaming content of Netflix to millions of customers all over the world through devices, or at Facebook where you are helping the ultimate businesses to be able to reach out to their customers, get to their goals, by bringing companies like Salesforce and Adobe together with Facebook to provide solutions to businesses, or at Pinterest most recently in a similar role. I think what drove me in all of those companies was this common thread of company A has a set of tools and features and specialties, and company B has their own set of tools and specialties. How can you bring the magic of those two companies so you can serve end customers much better than you could by yourself? The most recent example that might, give some context on how this all works is, before I came here, Lex, I was at Pinterest leading global partnerships and business development. We had at that point about 500 million users, and we struck this partnership with Shopify, which now has more than 2 million merchants, but back then maybe 1 million merchants. So how do you bring this amazing systems of merchants and users together so that you can display all these products to users and get all the intent the users have on whether they're building their crib or building their next backyard or whatever, right? So again, neither company couldn't do it by themselves, but how do we do it together is a common thread that has, that I have been spending in the last decade. And that was actually my original journey coming into Airwallex as well. How can we work with the banking ecosystem globally? How can we work with partners like Shopify, Walmart, Amazon, and so on, so we can build a partnership-based business? So that's been the thread.
Can you give us high level on Airwallex in terms of its core value proposition and then the scale that it has achieved to date? I mean, I think the company recently closed a $300 million round at a $6.2 billion valuation. So clearly something is going right. So what is the thing that is going right, and what's the core economic value add?
Yeah, grateful for so many things going right. We've been in the business about a decade now, Lex. Company was originally founded in Australia in 2015. So what it is at our core of what we do is Airwallex is a global payments and financial platform for modern businesses. You will continue to hear me double clicking on global and modern businesses as we talk through the rest of this conversation. We manage the full life cycle of our customers' banking and payment needs across borders. If you were to think of Airwallex as in a nutshell, it is more of what we have is capabilities of a global bank, but we bring it in a much more modern digital package. In terms of scale, we have about 1,700 employees now across 26 offices. We're now serving over 150,000 customers worldwide. These are customers that are small businesses, like yourself potentially, to very large multinational corporations. And we're fortunate to see business growing at 50% year over year in terms of customer growth. And what we've all in this funding round that you mentioned, we also announced that we are expecting to get to $1 billion of annual run rate by end of this year. And we're also seeing significant growth in our overall transaction volume as well. We mentioned we're doing about 130 billion in annualized volume globally. That represents about 73% year-on-year growth. And while we're expecting to hit that billion by end of this year, as of Q1, we saw 720 million in annualized revenue, and that is about 90% growth year over year. So yeah, very fortunate and excited to be at this point where our business is growing and we're getting to this 10 years into this business, and it's great to see these numbers coming together.
That's pretty amazing scale. So I'll follow it up with a basic question, which is just, why is this working? Because the payment space or the banking space is full of excellent operators, lots of good players, and you've got, whether it's TransferWise, you've got Stripe, and you've got Block, and then you have the different approaches to the space, whether it's the Swift approach between different banks, or whether it is trying to figure out embedded finance and open up banking accounts with API access, or it's the European open banking push. There's so much stuff, right? So why is it that Airwallex could get to, I guess, based on the numbers you're saying, it's 10% of Stripe's volume already and growing faster in a market that, does have lots of players in it? What is it that you've been able to do to outmaneuver everybody?
Several things. First of all, this is a very, very large market, right? If you look at all the different players in the space and the banks that have existed globally, because we're talking about multiple trillions of dollars of opportunity. So this is definitely not a market where one or two players will take it all. And to what I mentioned in the intro of Airwallex, the global and modern are the two key points for us. Ever since the company was founded, we've always had this vision that we want to be able to bring modern businesses. We want to bring that global connectivity to them from day one, not after they've grown into 5-6 years of this journey. So that's something how we've been constantly building the business. And also the current banking system, for the most part, is not necessarily modern or tech savvy, right? Swift, you mentioned, was established in 1973. So it's over 50 years old. You have no idea, how these correspondent banks work, where if a transaction is stuck somewhere, who's got it, how do you unwind it, right? So it's still pretty antiquated system. So we built our own network that is supported by over 60 banks globally. In terms of what we see as the main reason on the why for this growth is, there's several trends we've seen over these years, right? COVID, e-commerce boom, thanks to COVID because of that. And then, now people are working all over the world. So there's payroll use cases have shifted. Customers are buying products from merchants that are not necessarily in this country. So there's cross-border commerce that is happening at a much higher pace than we've ever seen. E-commerce itself has taken on quite a bit. Payroll has grown global. And we've, even a decade ago when the company was started, the vision of bringing businesses together and giving the entire world as its playground for those businesses has been in the mission from day one. So of course we had to build step by step, right? Initially, we were only doing cross-border stuff, right? How do you move money from currency A to currency B? That was the main DNA of the company. We've come far beyond that to some of the examples you've given, like TransferWise or Stripe or whatnot, right? I also believe we're quite unique in the way we operate because, one, we only focus on B2B use cases or B2B2C. So our business is completely focused on businesses. And then two, even though we started in cross-border, we were much more than that today. Just to emphasize on the numbers, today our net revenue is about 70% coming from payments, which is merchant acquiring and spend management. And that payments business is growing 3x year over year, which is like we haven't even started with payments for a good part of the decade. And we're seeing massive growth because this is a very, very large market. And then also, as we expand from initially doing just cross-border to now payments, to spend management, card issuing, we're also starting to launch interest-bearing accounts to customers all over the world, multi-entity management and so on. The number of customers who use our products is also increasing. So that means like you have more revenue coming from them, less churn. I think most recently, Lex, we saw 80% of our revenue comes from customers who use more than one product, which is amazing, right? Because they're seeing value in Airwallex, not just for whatever reason they came in. If you're a merchant, Lex, let's say you came into Airwallex because you want to take payments through Airwallex, then you see, oh, I have value here in terms of opening these multi-currency accounts all over the world. Now I can issue cards to my employees. Now I can do spend management for my company, right? So the reasons we're growing is because one, it's a large market. Two, it is multiple products and value we provide to our customers. And three, we're constantly growing our footprint. As you may have seen the news, now we're investing in LATAM as well, right? So I like to think about Airwallex as a living, breathing thing that only gets better as we scale.
In the early days, you talked about kind of the initial wedge into the market being cross-border. Can you talk about the persona of the businesses involved at that time, geographically or from a size perspective, and what kinds of products did they resonate with in the beginning? And then once we understand kind of that early value prop, then I think it'll make sense, the vectors of growth you described.
Maybe I'll also tell you how the company came together, so that gives you even more context on what type of businesses we started the company for. Initially, the founders were excited about bringing, this is back in the day now, more than a decade ago. As you may know, Melbourne, Australia is a haven for coffee lovers. People love the coffee and so on. So initially, the founders were wanting to create a premium coffee chain. And in their own experience, as a small business, they noticed that it was quite expensive when they were trying to buy machinery from different places, like beans from Indonesia or Jamaica or whatnot. So they saw firsthand cost of operating a business in this world when not everything you are buying or selling to is in the city or the country you're from. And it just so happened that Jack was as an engineer at one of the Australian banks, and he knew exactly how exchange rates work. And he was like, oh, instead of trying to create this coffee business, let me bring what I know in this space into a company. Right. So initially, the business was focused on probably less small businesses. They're definitely under 100 employees. They operate in countries like Australia or several parts of Europe or Hong Kong or Singapore or whatnot. And they're either in the business of e-commerce, where they have products to sell, they have services to sell, but their customers are not in the same country, right? They're either shipping products to their buyers cross-border, or they have their own suppliers. They may be buying stuff from suppliers from other countries, and every time you're moving money, there's 1, 2, 3% effects, right? So this all adds up very quickly. Not only you have to pay whatever 2.5%, 3% that companies like Stripe or others charge, but also more importantly, like now you're a small business. If you were to think about the coffee shop example, right? 3% you're paying on effects on buying your beans quickly adds up to COGS of your business, right? So initially it was small businesses that were less than 100 employees, primarily cross-border operations in both ways, not just money coming in, money going out. In a lot of cases, what will happen is you're a business, you accept payment from your customer in a non-local currency. Let's say you're in Australia, somebody pays you in USD. Now also have a supplier now in UK. Typically, the flow at that point was you would take that USD, convert into AUD. You've paid one that significantly higher markup, and then you take a part of that Australian dollars you've received from your customers. Now you have a bill that is due to your supplier in GBP or another currency. Now you're having to pay that currency change again, and you're paying that bill, right? So it is like this double conversion. So it is cost prohibitive to run a business like this. So initially it was a lot of those customers that are primarily cross-border. Then customers were asking us, hey, you're already helping me move this money from country A to country B. In a lot of cases, I don't want to move the money. I want to keep it in a bank in that country. Let's say the same example. I want to keep my US dollars that I'm getting from my US customers in US because I might need that money for paying suppliers later, right? So can you give me, I'm sitting here in Melbourne, can you give me like half a dozen different bank accounts in the local currencies? Okay, sure. Then we started building a treasury solution so our customers can have access to all these bank accounts globally. And then the natural path was, can you also help me take these payments in multiple currencies? Like help my customers pay me in local currencies so they don't have to pay these exorbitant fees. Then we added payments, right? Then, I was a 10-person company when I joined Airwallex. When I came to Airwallex, my business has grown. Now I have 100 people. I want to be able to issue cards to my employees so they travel or they have their own expenses. Can you help me with card issuing product? Okay, we build card issuing product. Now we're at a stage where these 100 people, companies are like in 200, 300. They're like, hey, can you actually provide interest for my accounts I'm holding, money that I'm holding with you? Or can you help me provide software so I can do spend management, right? So that has been the company evolution since we started and the types of businesses that we've seen. One other thing we've seen is, to my point earlier, that Swift has been so antiquated in how long it has been there. All this infrastructure that we offer to our customers, our products are built on, is something that is homegrown, built at Airwallex. This 130 billion payment volume I mentioned is on top of Airwallex's own network that we built, right? And 95% of this volume moves through our own payment rails. Then we also realized, we built this for our customers. Maybe there is a way we can also white label and embed any and all part of this infrastructure we built so we can power businesses like a Shein or a Brex or a Rippling so that they can build also embedded fintech services without having to reinvent the wheel of what we've already did. So that's been the evolution.
What I'm trying to wrap around is at every stage here, the client is saying, I would rather build on top of the relationship I have with Airwallex because they already have my accounts and so on and my workflows, rather than let me get ramp or deal for my spend management and let me get Rippling for my employee payroll and so on. You know what I mean? Like, because there are chunky players in the categories that you describe, but it sounds like maybe a combination of, yes, maybe in the US, but not geographically where Airwallex started. And so it was kind of a blue ocean opportunity. And then even though once you get big and global, you do have very direct, high quality competitors, these are platforms that are really sticky. So the multi-products all work together. Is that how I should interpret the story, or is there more nuance there?
Yeah, I think that is exactly right. In the countries, in the regions where we're operating, we were one of the few players who were seeing this value of providing multi-products and naturally expanding. You're right. There are players in the US like Rippling, Brex, and others who may have started with a certain product and then they are expanding other products to other products. In some cases, like Rippling, we don't do payroll today. We've been able to find a partnership where we're a money movement engine, right? Like we move money all over the world. What we've been able to do is help Rippling pay their employees in multiple parts of the world. So even in areas where we don't have a product per se, like payroll, for example, or taxes, we've been able to offer our infrastructure and find multiple uses for our infrastructure. So yes, you're right. we naturally grew in markets that we didn't have a lot of competition. And even when there is competition in the US, where there are much more established players, we've been able to find areas where we can work together, to my partnership thread that I mentioned before, on, okay, like how can we work together so we can still help them and still get business while we may be competing in similar areas outside of the US, if that makes sense.
Tell me about the scaling of the company, because you said there's 1,700 employees, and I'm sure a lot of that has been kind of in recent years as the company went more global. I'm really interested in, especially given your role, the go-to-market structure. What does that look like in Airwallex? Is it by geography? Is it product-led? How did the go-to-market motion get built, and what is its shape today?
Yeah, it is in some ways crazy, Lex, that, again, from the examples we discussed, I have been at US incorporated and US led companies that are much, much bigger in size and revenue. But it's also crazy that Airwallex, with 1,700 employees at almost a billion run rate, has 26 offices globally, right? It's quite unusual for a company that is so distributed all over the world. But it also speaks volumes about our founder's mission on how going global, not just helping customers go global, but Airwallex being global, has been in our DNA from the beginning. In terms of that scaling, the go-to-market motion has been now, almost like 10 years into our journey, we're investing more and more into product-led growth. Initially, it was primarily sales and channel partnerships. So another good, effective way of go-to-market for us has been, how do we centralize global functions while retain regional autonomy or regional focus, which I believe is something that Airwallex early on has been able to figure out and do much better than, I would say, most of my experience in the past, where typically headquarters trying to do a certain thing or forcing a certain thing. I myself have been guilty in the past of, trying to launch a product sitting here in Silicon Valley and making assumptions for my counterparts in Asia or Europe or whatever, right? I think pretty early on, our founder, Jack, our CEO founder, has supported this GM model where I report to Jack and I have counterparts in Europe and Australia and so on, where we have regional responsibility. Ultimately, the P&L sits with me here in Americas. I am directly responsible for the go-to-market plan, whether it's by sales, by partnerships or whatnot. But then I also have central functions to count on, like product engineering, compliance, and so on. And we've been able to replicate this model in almost all the parts of the world that we operate, which has been uniquely helpful for us, where we have a central marketing function. And we've also had marketing-led growth for a long time. We're investing in branding through our McLaren partnership. We've been spending a lot of money on growth, performance-led marketing. Now we've been at the scale that we have and the products that I mentioned, where we're seeing increasingly attach rate of our products growing. We're also investing in a product growth function. So it's natural evolution from what I've seen also in my past is, after, like, you see your sales teams and partnerships teams growing the business, then you try to get even more efficient in product trying to sell itself in some way. So that's what's happening. In my purview, what I've seen it is, when I joined Lex, we were 20 people. We were barely getting some money transfer licenses. We had almost no revenue. And thanks to this model that we have in place of the central versus regional, central plus regional investment, we now have almost 200 people in the region. We're approaching a 30-ish million run rate on US alone. And we haven't even started monetizing Brazil and other parts of LATAM yet, right? So this model has been working really well for us, and we will continue to invest in this model in other regions as well.
When you joined the company, and more broadly, when you joined the other high-tech companies that you were involved in, for you to move the needle, what are the prerequisites? For a partnerships function to add value to a company, you usually need to have a certain level of scale, right? Because you've walked through the sort of like, okay, in the very beginning, it's marketing, founder-led sales, and then you add kind of human sales and business development reps and qualifying and closing deals and so on. And then you get to a level of sort of complexity that you might have revenue operations and all of these additional kind of functions. When does a company need a partnership function, and how is that different from other go-to-market functions that might be much more focused on leads, closings, revenue, that kind of thing?
Yeah, we're certainly focused on leads and the funnel and optimizing this funnel across the leads and what leads make sense and not. Like we're definitely investing in it. I would say in the last couple of years, 3 years or so. Jack and I are still involved in several of our deals because we really care about customers, and we will never be far from the customer. So I don't think we'll be walking away from founder-led or me not being involved in deals. In terms of when partnerships and like how do you work together, what time frame, I say you have to have a good enough product market fit. What is the value proposition you're bringing? Why does Airwallex exist in the sea of other providers? How do you stand out? I think you need to have pretty good clarity about that, and then be able to like explain to partners, to customers, like where we can add that value. And there needs to be examples, or there needs to be some scale and validation of that value proposition, right? So initially, it was definitely hard work to try and convince customers or partners here in the US. But our angle was, look, we bring a unique perspective to your businesses because we bring our global first mentality that most US companies may not have had experience in. And while we may be a new player in the US, we're already operating billions of volume outside of the US. More importantly, the regulatory framework outside of the US is very different and very complex, which we've already invested and we're already operating on. Why do you want to reinvent the wheel? So that's been the angle. Like, even though we didn't have a lot of those validation points in the US, it was winning one customer at a time, two customers at a time, and having those customers be your champions. Like we had early days. Like we were very fortunate to be able to work with some very awesome brands in the US, like Brex, for example, or Navan, which was Trip Actions at that point. And these customers were looking for very specific gaps that their current providers may not have offered them. And we were able to fill that gap. We were able to help them scale. And then they found more value in other Airwallex products. And then they become your references, right? Now they're referring to other customers. We've also been fortunate, for example, a startup in procurement space like Zip, which has been scaling a lot. We've been involved with them from very early days, and they're growing significantly, and we're fortunate to grow along with them, right? So those have been the go-to-market wins for us, where those early customers have specific problems, specific opportunities, give you a chance because of your credibility elsewhere in the markets they need to go to, and then one leads to another and so on. And then now we're talking about how can we become like a white label wallet solution for some of these marketplaces? How can we become the payout choice for some of these marketplaces, right? So in 3 years, we've been fortunate from going from, hey, trust us on our global capabilities, to now, can Airwallex be your one-stop shop for all of your financial needs you have as a business?
Maybe we can do the same exercise as before about the persona of the business, because the names you mentioned here in the US are very different and much bigger. And immediately my mind goes to like, there's lots of payout and checkout options. Like, again, like why, how, and why, right? That these companies need a global first approach, and that's the main thing. Like, they don't want to manage multiple vendors for different geographies, like, or is it something else, right? Because again, like the payout function is very competitive, and then you're starting to be adjacent to PayPal and Visa and MasterCard and Shopify. What's the persona of the initial customers in the Americas, and what is it that you're offering them as a wedge that they couldn't get somewhere else?
Yeah, I think you mentioned that, right? It is because they may have invested in one of the solutions that is a point solution, right? So if you look at each one of these spaces alone, Lex, they're very competitive. There's some amazing players. if you look at each vertical, right? There's like lots of players in payout alone. There's a lot of payment. There's a lot of players in payments alone. There's some players in wallets alone. There's some players like, in who do spend management and so on, right? So what has been happening is, you also mentioned PayPal. What has been happening is some of these marketplaces, some of these e-commerce companies who in the past have had the luxury to have multiple vendors, multiple solutions, multiple tech products to build and maintain, it does not make sense as much now because it is hard to maintain this like 5, 10 different integrations. And each of them may not necessarily be offering them what the business needs. They're not necessarily keeping up with the business's growth. For example, we offer like over 100 plus like local payment methods, right? While certain local payment method may not be important to you if you're sitting in the US and like thinking about the world, but then it is very important to that customer, to that consumer in that market, to the point where it influences their buying, right? If you do not offer that LPM in that market, the customer will not have intention to buy the product from you, right? And these payout providers don't necessarily have all those optionality that the end customers need. It is really going from multiple vendors. In some cases, some of these vendors are not necessarily growing or giving them the right optionality, is where Airwallex is coming, because everything we do is cross-border. Everything we do is built on top of a multi-currency wallet, whether it's money coming in, money sitting in that account, earning interest over time, or you have to do payouts from that multi-currency wallet to anywhere in the world, or you want to be able to like issue cards against that wallet. You can do all of that through a single Airwallex integration. And we're totally good with customers having choice. We don't necessarily force our customers to use all of Airwallex capabilities. We basically go and say, whatever is the biggest pain point today, we're happy to help solve that pain point and let us earn your business over time. And that's what we see. Brex came to us originally to just do collections of credit card bills globally on local payment rails, right? Then they wanted us to help them with issuing. Then they wanted to help them with FX, right? So this is how we see being able to operate, even though this is a crowded space, because no one else, if you look at by sector, as I mentioned, by vertical, yes, we have tons and tons of amazing competition, but then there isn't as much competition when you put it all together in a single platform that is regulated globally, that has licenses all over the world, that operates at volume and has multiple products. There's not much or any competition that can offer the same capability. So that's really been our if you might, secret sauce or value proposition that's been working.
Interesting. So I'm hearing a bit of like Visa's network of networks positioning. And then, of course, you mentioned the dynamic between you've got point solutions and applications, and then you've got platforms. And so there's always this natural pendulum where you'll have a platform that has all the stuff. Let's call that platform for the US like Bank of America or Citigroup. And then fintechs come and take it apart and rebuild parts much better, and then are able to win business against the platform. And then eventually people get frustrated with managing all the point solutions. And the most successful of the point solutions end up trying to go broader and integrating everything. And then you end up with a next generation platform, and sort of the cycle repeats itself. And unlike the Visa network of networks, which, as a $500 billion company is valuable enough and gives you a big target to follow, it sounds like you're looking not specifically at the longest tail payment network, but rather the entire money movement, payment, small business, treasury stack, right? So kind of everything for the financial accounts, and then money movement around it, and the financial workflows related to it. So it kind of goes from payments into banking capability, spending capability. And so it's a little bit closer to the business problem. So it's an aggregation of various business problems related to payments, money movement, and banking in a sort of platform aggregator approach. Is that a fair way to think about it?
Absolutely. I might use that statement you said because I don't think I could have said it better. Exactly that. Uh,
It's okay. I'll take some advisor equity. It's fine.
and you're exactly right. If you were to think about if you're a CFO at our target size company, somewhere in the 100 200 range of employees, right, like operating globally, how do we continue to add value to you? So we're bringing you, for lack of a better term, like, bringing everything together in a single financial operating system to the CFO. So you can manage your business, everything from money in all directions, coming in, coming out, like staying, getting our interest, whatever, right? And of course, like we don't do everything today that a CFO might need, like payroll, right? We'll partner. We don't necessarily do travel. We'll find opportunities to travel. But in all other aspects, like how can we take that aggregator approach, both in serving customers as Airwallex and we own their customer relationship, and also in some cases, how can we serve customers that we don't necessarily own the customer relationship, like in this example of Brett's, right? But Brett's does. But how can we find enough value so we can white label and license our infrastructure in countries, in markets it makes sense? So collectively, we're bringing that platform to our customers and increasingly become this financial operating system to the CFO is what we're building.
Got it. Okay, that makes sense. Now that we're in this world where we're a global platform that's multi-jurisdictional with regulatory hooks in a whole bunch of places and, integrated to probably hundreds of different financial services, the natural question that comes up is, how does this thing stick together? Right? Because if we look at embedded finance and in particular, let's say the Synapse Evolve situation, Synapse had a pretty straightforward integration into what was, I think, two core banking systems, one of which was the one they used consistently, and I believe that was Jack Henry. And then they had, through Jack Henry, one integration into the Evolve Bank and maybe like two other banks. And primarily they were going through Jack Henry into Evolve, and that was the data stream. And then they've repackaged that out to maybe 20 to 50 B2C customers, and they were at the B2B intermediation layer. And in doing that, they ended up losing somewhere between $50 to $100 million, blowing up Synapse, blowing up Evolve. And it wasn't Synapse's fault, but the reconciliation between these systems was so profoundly horrible based on the data architecture in old core banking, based on the data practices of a small to mid-sized bank like Evolve, and based on a startup that was moving very quickly like Synapse. Like, that was just a powder keg of missing payments, unable to reconcile systems, and so on. What you've described is like 100 times more complicated because you're using many banks in different geographies. You're eating the FX complexity. You're working through many more workflows than just like sitting on top and reconciling payments. How do you solve this, and why does it work?
Yeah, great question. I think because we've started outside of the US, and there's also this concept of a sponsor bank where you can easily become a fintech overnight, does not exist outside of the US in most parts of the world, at least that I'm aware of, right? So we see regulation, we see compliance as key parts of how we've grown the company and key moat for a company, right? So even before we launched in the US, which was like now 3.5 years ago, we've had 7 years of experience building the company on much more complicated regulatory systems in Australia, in Hong Kong, Singapore, and so on, where Airwallex is the e-money license holder or the MSP or like whatever is the local regulation that you need to be a fintech in almost all cases, which is much more arduous than in the US. And then our approach has been in every region that we operate. I now think we have more than 60 banks, and then of course the payment networks, then the different LPMs, and we are our own liquidity provider. We have our own liquidity pools for our FX, right? So we've been able to build this multiple financial partners, multiple banking relationships globally, which is like very, very hard to do over time, and it's very hard to do it overnight, right? So, and what we also do is like, in all these jurisdictions we operate, we safeguard our customers' funds. So for whatever reason, even though we're at this scale, if for whatever reason, if tomorrow, God forbid, Airwallex doesn't exist, those customer funds are safeguarded. And like, those funds are in really large bank accounts and safe, right? So we built the system in a way that is foolproof in some sense to all of this because of the scale we had to build. And at a payment company of this volume, as you know, Lex, it's mostly a volume game. So we're trying to go down to be like, how much of this infrastructure can we own without being a bank itself, right? So, I mean, that's evident from what I mentioned, this 130 plus billions of volume that we do. More than 90%, I believe it's 95% of that volume runs through the network that we've built. And the remaining 5% goes through Swift and whatnot, right? So we had to do this. And again, I'm not saying we have all possible types of synapse situation covered for, but like, because we had to operate for a good 7 years of our existence in a far more complex environment where you are working with the regulators regularly, you are filing those reports, you are doing audits every year. And, we're a principal licensor for Visa in markets where you can. We work in every market we operate, Lex. We have a multitude of banking partners, a big bank like JP Morgan or SCB or ANZ, and then like a modern bank and so on. So our system is built on a lot of redundancies. And when you bring that into the US, we operate both MTLs and bank sponsor model here too, right? So that redundancy and these learnings outside of the US, to be honest, like make us a much more stronger player in this space because I would say like companies that have primarily roots in the US don't necessarily have the same expertise or don't necessarily have the same experience going through it.
I think that makes sense, but I don't know that it completely de-risks the complexity, right? Like, what does the tech team look like to maintain all of these integrations? Like, of the 1,700 people, if you look at the tech organization, what's the scale of that? And then how much is dedicated to making sure that the connectivity is there versus, like new initiatives, user interfaces, and so on? Because like, if I think about the aggregator industry, so whether it's Plaid with data aggregation or whether it's Envestnet, and the amount of effort it takes just to maintain the ledgers to talk to each other. And I imagine for Airwallex, like you have to have internally some sort of ledger that you're syncing everything to, is really complex. And you can have hundreds and hundreds of people whose job it is to, I'd say, merely or just spend their time like making sure the connectors to all the things are working. So can you give us a sense of that machine?
We have several hundred engineers that are split across multiple countries so that we were able to keep up our network and add new features. So our engineering team today is split between Melbourne, Sydney, Hong Kong, and a large set of people are in Shanghai, Singapore, and also the US, right? So the way we think about it is there is a set of infrastructure that always needs to be kept up and all these connections that are into the different liquidity providers and liquidity pools and financial partners and so on. And then there is the new product development we do. We also have moved into a model of a product GM, right? Obviously, I have the P&L for the commercial part of Americas, but we're also having product leaders who have this ownership mindset. So there is a product owner for our treasury network. So that team operates as a business unit where they have engineers, PMs, financial partnerships, salespeople, and so on, so that run that entire treasury network we operate that is used by multiple products as a P&L, right? So they know and are responsible for this. And similarly, we do that for yield. And we have a core banking team that is also spread across multiple countries that builds into all these different connectors. So yes, you are right that it's very complex. I don't have the exact number, but a large percent of our engineering team is focused on the hygiene and the maintenance of all these hundreds of different connectors we have that brings together this Airwallex infrastructure. But we also have hundreds of engineers building new products and new capabilities on top of that network, right? Ultimately, that infrastructure is what makes Airwallex special. And this is not just, to maintain this network, but also we have to have this capability of detecting fraud, of like having real-time transaction monitoring so we can report anything that we see on a regular basis. And we also have to file different SARs and so on to our regulators. So yes, I agree, it is a very complex operation, but because we've started on a journey to own the infrastructure as much as we can, instead of building this network of networks model, or instead of like operating on someone else's network and whatnot, we own the overall payment network as much as we can, and we have to staff and build it in such a way so we can do this, right? So yeah, it is very complex, but that's how we've been building one step at a time since our 10 years existence.
To wrap up, let's imagine Airwallex in the future, in 2030, 5 years from now. What do you think will be the scale of the business? And I'll throw a little bit of a curveball in there, which is around stablecoins. Jack was on social media recently with a bit of a pushback that stablecoins are going to be a meaningful part of the payments infrastructure. So I'm curious, like looking forward, if you're trying to get that 3x growth and continue multiplying to scale, where do you think you're going to be in a saturated market? Like how far do you think the company gets? And then from a tech perspective, what is constructive if it's not stable coins to the business?
I mean, I want to clarify on that. I have seen what Jack said, and Jack likes engaging the community on, he's not afraid of talking his mind. And it is a fact that today we don't have our customers asking us like, hey, when can you have stablecoin either pay in or pay out? Like, when can you provide that to me? It's not high priority as today. But having said that, we are seeing regulatory clarity obviously in the US and other Western markets. We still don't see much of value, especially in the G10 currencies, because as Jack was saying, in the most cases, we do operate a near instant network, and and the costs are pretty low, right? Like I think his famous quote was, you can be cheaper than a zero and you cannot be faster than instant, right? But having said that, I do see value in stablecoins in use cases like payroll, in countries where currency fluctuations are massive, the last mile. There are definitely use cases there. It just so happens it's not necessarily something we're seeing today in our use cases that we're solving. To your question, where we'll be in 2030. So the company has been more than doubling over the last several years, and it's like, we see a 90% growth year on year. So you can just like compound that, like, and what would it be in 5 years from now? So where I would like us to see in 5 years from now is, as much as I'm proud of how global we are, Lex, there's several markets that we still do not operate in. Like India, Japan, we're close. Korea, we're starting. Like LATAM, we just are scratching the surface of a very, very large market. From a capabilities perspective, Lex, I would like us to be in all those major markets that we're not there today. And in terms of ambitious goal of, you mentioned like we're a certain size of on Stripe today, but it's nothing to do with Stripe, but on our own, as we see our business scaling, I like us to be at that $1 trillion of payment volume across all the products that we serve. And we're also not just for the sake of using AI for the sake of it, but beyond customer support and beyond making our developers more efficient, we're also investing and building AI into our products. So, by 2030, or even much, much sooner than that, hopefully you'll have a set of our products where you're a startup founder. On day zero or day one, you'll have this financial operating system that we've been talking about available to you automatically in an agentic finance world, that you don't need to integrate anything. You don't need to build anything. It just comes to you from an Airwallex, or some other company to you, right? So I expect us to be offering the choices of whatever financial products and services that you need anywhere in the world, and a network that brings volume and scale. So no matter what size and shape you are as a business, you can use any and all part of Airwallex. In terms of numbers, I would like, again, this isn't necessarily a company position, but I ambitiously would like us to be at $1 trillion volume, And whatever that brings in terms of revenue at the scale we are is what I'm hoping for us to be there in 2030.
That's a fascinating story, and I can't wait until we've got $1 trillion in volume for you. So that's exciting. If our listeners want to learn more about you or about the company, where should they go?
They can go to airwallex.com. I'm also happy to engage with any of your listeners on LinkedIn. You can find me on LinkedIn, Ravi Adusumilli, or airwallex.com. I'm happy to double click on any of these things I mentioned, answer any questions, and would love to reach out if they're looking for any needs that are not necessarily addressed today. So thank you for the very insightful conversation. I really appreciate your time, Lex.
Wonderful. Thank you. Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things FinTech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.